Oil prices end the week moving lower, closing below $71 on a weekly basis for the first time in 2025. But it hasn't been just this week. Taking a step back over the last month or so, oil prices are down about $9 after peaking in mid-January at about $80 a barrel. We've seen a reversal move lower. Today that culminated in prices getting below $71 after we saw prices rising earlier in the week. We saw prices rise up to as high as 74. It was a reversal midweek. As we got more data, more supply, more geopolitical questions up in the air, we saw prices continue to decline and ultimately closing out below 71 to end the week, lower on the day and lower on the week. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And you will see that volatility and prices have been moving hand in hand since going back to that $80 a barrel level back in mid-Jan and the reversal lower. We've seen volatility moving lower, and that's exactly what we saw this week. Volatility moving lower as prices move lower. Lastly, let's talk about positioning. What are speculators doing? Well, what they've been doing really over the last month is exiting their net long positions, and it really follows hand in hand with prices. As we look at prices from the $80 high back in mid-Jan moving lower, we see volatility moving lower. We also see speculators exiting their net long positions. So it goes hand in hand. As prices move lower, speculators have been part of that reason. So after a busy week in the markets, we got inflation data, we had a Fed chair testimony, we had weak retail sales. Ultimately, oil prices, which rallied early, ended up closing out the week lower as the market continues to see more questions and answers around geopolitical risks, economic risks, and yes, even supply risks.